Guys, this is S&P 500 weekly technical analysis for the week of September 16th. Now that the S&P 500 managed to regain its bullish movement, it is heading to its all-time high level, that was 5670, and the closing of S&P 500 on Friday was at 5626. So it looks like that S&P 500 is very near to 5670, and it can hit 5670 as early as on Monday. However, this is not that simple, because if you see that there is a trend line, and the same trend line is there in the Dow Jones, and this is the trend line of the Dow Jones, and this trend line in the Dow Jones and the S&P 500 is going to create a problem for the S&P 500. But last time there was the butterfly pattern, because of which, and also there was the confluence zone, and so because of these multiple factors, S&P 500 came down, okay, as we were anticipating. But now this butterfly pattern is not there. The pressure of the MACD is still there on the S&P 500 through the weekly charts. So once there comes a trend line breakout, okay, or a bullish breakout at this the trend line, then S&P 500 will not be looking for 5670 or so. It will be looking for 5750 approx or around. However, if Dow Jones and the S&P 500 struggles around this the trend line and fails to give a bullish breakout, a trend line breakout, okay, then it will have to wait at least until Tuesday morning, when the retail sales data will be published. And last time also we have seen that because of the retail sales data, S&P 500 managed to reverse the trend and moved up heavily. However, one thing is very much clear, that irrespective of any data, any event, if the S&P 500 and the Dow Jones fails to clear the trend line, or if there comes no trend line breakout, in that case there won't be any more bullish movement, nothing. There may come an intraday breach, but that will not fulfill the condition, and eventually it will have to come down. And this time this bearish pressure, it will be heavy, just like what we have seen in the first week of August. And remember, that bullish breakout or that trend line breakout is same as what we were anticipating at 5395. And this was my previous S&P 500 weekly technical analysis. And here I have mentioned that this is the last chance for the S&P 500 to recover or to regain its bullish movement, because if it loses 5395, in that case 5192 and 5000. But if it recovers from 5395 or around 5395, in that case it will be moving towards 5550, and then the condition of 5550 will be applicable. A closing above 5550 means it will be looking for its all-time high level. And this, the entire bullish movement was because of this, the very heavy intraday bullish retrace on Wednesday on September 11th. And if you notice, in the first hour it gave up, in the second hour it came down and hold, and the low was 5406. And when it was coming down, then in my first update to my Patreon community members, I mentioned that whenever it comes down because of the recent trading, the S&P 500, the SP500 will take a break at or a little before or little above 5402. Because losing 5402 will help the SP500 to achieve its goal. So it was true that on Wednesday we were anticipating a break, a reversal from around or a little above 5402, and when it breached the open equal to high condition or come out of the open equal to high condition, then it was sure to go bullish because of the formation of the bullish slip. And this was my second update after the formation of the first half candle, and it was clear that now S&P 500, that now the SP500 is out of the open equal to high condition. Thus there is nothing much left for the bearish side except the zone. There was a very heavy support zone. This is why with now a little push, SP500 will be able to move up to or beyond the next level above 5500. Anyways, the similar bullish, bearish conditions and everything, the trend line breakout, success, failure, bullish, bearish. I am going to discuss everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise SP500 analysis and updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. The most important part here is the heavy swing in the MACD. And as I mentioned earlier, okay, in last 3-4 weeks, that someone is willingly swinging the market, and this can be validated through the swings in the MACD. So again, I will show you these the swings, and now there is a possibility that if everything goes in favor of the stock market, okay, and there comes a bullish candle on the weekly chart, then on the weekly chart the S&P 500 might give a bullish crossover. Okay, and what will be its implications and everything I will discuss here on the weekly chart. So weekly chart means the long term picture, the big picture, okay, for a week, for a month, more than a month or so. Second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, there was a bullish slip on September 11th, as I mentioned to my Patreon community members, and because of the formation of this bullish slip, okay, next 1 or 2 days it was supposed to remain bullish, or even if there would have been any fall, then also that fall would have been limited. So we knew that, okay, now it is in a condition where, okay, in the bull side it is restricted, okay, around this level, whereas in the bearish side, okay, there are very heavy chances that it is not going to lose, okay, this the heavy mark or the heavy support zone. Okay, so now on the daily chart, what has happened is that the technicals have turned or have changed to bullish. On Monday, if there comes one more bullish candle or just a little or a thin red candle, okay, in that case S&P 500 is expected to become 90% bullish on the daily chart. So I will show you through the technicals how this is going to work. Daily chart means the short term picture. Okay, point number 3 is the probable movement of the SP 500 from September 16th, which is Monday, to September 20th, that will be Friday. So just like last week, I've discussed the bullish, bearish conditions, the fall, okay, or the bullish movement. So here the most important part was 5395. Okay, if the SP 500 loses 5395, then 5192 and 5000. But if it sustains at 5395, then it will regain its bullish movement and towards 5550. And once it gains 5550, then the condition of 5550 will be applicable. That will then push it towards the all-time high, okay, or a zone which is just before that, the all-time high. So similarly, I will give you the bearish and the bullish movement, and I will discuss the trend line, okay, but this trend line breakout, the conditions, okay, and everything in detail here in this last point of the agenda. So now guys, I have one more information to share with you, that all of these, the 3 sections are interrelated and interconnected. Whatever I am going to discuss here, like in first section, okay, this will be related to the second and the third. When I will discuss the probable movement, then by that time I would have already discussed the MACD in detail, the candles in the first and the second point. This is why it is recommended that you should watch all of these 3 sections in order to understand what is going to happen in the S&P 500 and why that is going to happen and how that will happen. So now guys, I am going to discuss the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart, and this is the weekly chart. W means weekly chart, okay, and one candle represents 1 week, not 1 day or 1 hour. Okay, so now here first comes the candle. Now before I discuss the candle, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So there are a few characteristics of this candle, very important characteristics. If you notice, this was the previous candle, very heavy bearish candle, and it was in the open equal to high condition. Okay, so through this candle it was clear that the next candle, this candle, it will not come into open equal to low condition. Whatever the open price will be, it will come down. Okay, thereafter it may recover, or or there may come more fall, but it will not be in open equal to low condition. But if you notice, the high of this candle was 562389, means 5624. The high of this candle was 5624, whereas the closing of this candle was, or the closing of this candle is at 5626. Okay, so you might be thinking that it's just about this the 2 points. No, in the stock market, even if there comes a difference of 1 cent, okay, so that is also very significant. Okay, sometime now, because of the closing above the high of the previous candle, especially on the weekly chart, in that and especially in the manner when this was in open equal to high condition, okay, this indicates markets sentiments or markets willingness to sustain bullish and to trade bullish. This means that now, even though there was a very heavy intraday movement on September 11th, okay, which was neither supported by the data nor supported by the technicals, okay, and also there was no news. So that was an external manipulated support, okay, it was just to change the direction and nothing else. But what happened or what did not happen, now it doesn't matter as such, because the closing is above the high of the candle, especially in the open equal to high condition. Okay, in this manner there are very good chances, very strong chances that S&P 500 is going to move bullish, is going to move up. The only hurdle is the trend line, and the trend line is at the level. And what is that level? Once again, 5644 comes into the picture. So in my second update on Friday, last day, I mentioned that irrespective of anything, any movement, okay, the S&P 500 should give up after hitting or reaching 25644, as its chances of survival at 5644 are technically zero. This means that at first S&P 500 was not supposed to hit or to reach 25644, and even if it would have reached 25644, then just after hitting 5644 it was destined to come down, and to come down heavily in that manner. So in a manner, because it moved up and it made a high of 5636 only, it failed to hit 5644. So it managed to save itself and closed at 5626, because a hit at 5644 would have forced or compelled it to retrace by at least half a percentage points, okay, means from 0.5% to 1% within half an hour or 1 hour. Anyways, so this was with the candle, and if you notice the Dow Jones, this is the chart of Dow Jones. Dow Jones failed to do so. The closing of the Dow Jones was not above the open, okay, which was in the open equal. Dow Jones was also into open equal to high condition. It was not in that the condition, okay, and the closing is below. But because there was an heavy intra-week retrace, it moved up, okay, and it is now moving towards its all-time high. So it is also filled with the bullish sentiments. Now, another important part is the technicals. Now, in terms of the technicals, if you notice, okay, nothing has changed for the bulls as such, because last week also I mentioned around 65 or 70% it was bullish on the weekly chart. Okay, the only bearish factor was, okay, at first the MACD, and secondly it was the closing below the moving averages. But now S&P 500 is bullish through the moving averages, clear fan out, no doubt about that. It is bullish through the Bollinger Bands. So, and also S&P 500 is bullish through the Ichimoku cloud, and the S&P 500 is still bearish through the MACD, and S&P 500 is still bearish through the stochastic RSI on the weekly chart, and these two are actually putting the pressure on the S&P 500. So this, the trend line breakout or failure or this thing, okay, the combination of the bearish MACD and bearish stochastic RSI will be very decisive, because even if the S&P 500 will try to move up, these two will try to drag it down. Okay, and as I mentioned again and again, and if you have subscribed to my YouTube channel for last many months or years, then whenever the MACD and the stochastic RSI are aligned in a particular direction, then that direction becomes the direction of the stock index or wherever it is seen, and now they are in the bullish direction. Okay, here once again, if you notice, okay, that it is very linear in the S&P 500. It was, at least, okay, then there was a slip. Okay, it is trying to move up, but it is not in a condition where we can anticipate a bullish. But yes, there is one thing, that if on Wednesday, okay, the Federal Reserve chairman goes extremely dovish, okay, and favors the Wall Street heavily, and there comes a very heavy bullish movement, 4%, 3-4%, 5% in the entire week, then there may come a condition where it can hit, okay, the MACD can hit the signal and will be very near to the bullish crossover. In that case, next to next week, irrespective of anything, there will be a bullish crossover. Okay, so because of this kind of movement, okay, I mentioned that someone is swinging the market, and this is very much clear in the Dow Jones. Anyways, so S&P 500 is bearish through the MACD, S&P 500 is bearish through the stochastic RSI. It is neither overbought nor saturated. So overall, the S&P 500 will be considered 70% bullish on the weekly chart. Now comes the Dow Jones. Now, looking into the picture, okay, the technicals of the Dow Jones, clear fan out in the moving averages, closing. So Dow Jones is bullish through the moving averages. Dow Jones is bullish through the Bollinger Bands. Dow Jones is bullish through the Ichimoku cloud. And now MACD. Dow Jones is bullish through the MACD. Dow Jones is bearish through the stochastic RSI. It is neither overbought nor saturated. It is more bullish as compared to the S&P 500. So Dow Jones is like 80 to 85% bullish on the weekly chart. Okay, now again, the same thing. This is the Dow Jones. You can see linear movement and then the swing. Okay, and on September 11th, okay, when the S&P 500 came down and it was around 5,406, at that time, okay, Dow Jones was also trading heavily bearish. That time it actually has given a bearish crossover. So you can see heavy swings. So someone is heavily swinging the market. Okay, generally these heavy swings are seen, okay, before a short-term correction, okay, short-term or long-term correction or a recession, okay, or whenever a heavy fall is anticipated. If this kind of swing is seen on the daily chart, then like within a week or so, okay, within 1 to 2 weeks, there will be a heavy fall, back-to-back red candles. If it is seen on the weekly chart, then this indicates a short to long-term correction, which will be seen at least for a month, 2 months or 3 months or so. And if you have subscribed to my YouTube channel for last many months or years, then again and again, okay, I have shown you through the technicals, okay, and the actual fall whenever, okay, that was seen. And yes, there is one more thing. The heavy swings, okay, are generally seen for the bearish movement only. Okay, means this heavy swing does not mean that they are preparing the market for a heavy bullish movement. No, they are preparing the market for the bearish movement. Okay, so these swings signifies that in the coming days or weeks, okay, we are anticipating some fall in the market. Now, so Dow Jones is 80 to 85% bullish, whereas S&P 500 is 70% bullish. Now guys, I have one more information to share with you. This is my S&P 500 or stock market knowledge transfer program. Through this program, I teach the movement, strategies, trend, analysis, technicals, predictions. Prediction means predicting the movement even before it happens or it is seen, support and resistance levels, and much more. The motto of the program is to help you become self-reliant. This program is delivered one-on-one basis only. And whatever you are going to learn here, it will be applicable to any stock, any index, any currency, any commodity, any crypto, or anything that is traded in the stock market. And this is my email address, which I have also mentioned in the comment section and also in the description of the video. And this is the Google spreadsheet. More details are there in this Google spreadsheet. And when you open this Google spreadsheet, then you will see that I have mentioned clearly what I am going to cover from basics to advanced. Okay, and I will share my modified technical indicators, the values. Okay, and the trading strategies. Okay, day trading, position trading, trend trading. Okay, and to understand what is happening in the market and why that is happening, what will be the impact. Okay, in the near term. And the options and options trading and the live options premium calculator, and I will teach you that how you can calculate the premium value of any option. So I will teach you how to use the binomial and Black-Scholes, and there is a very simple options premium calculator that you can use in order to find a value in less than 30 seconds, and how to deduce the trend of the market. Okay, and what can change the trend and everything, and how to analyze the historical and the available financial data and everything. And these are some important terms and conditions. These are the snapshots of the recent meetings. So guys, this is my email address. If you have any questions that you want to ask, or if you want to participate in this program, then I've given the link to this program and the email address in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. So here I will do the technical analysis of the SP 500 on the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, so now here the most important thing, okay, as you can notice, this was the movement in the bearish side and this is the movement in the bull side. Anyways, let's first analyze the candle. But before that guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now let's discuss the candle. It's a small bullish candle, and also this candle means was not seen in the open equal to low condition. Okay, just a small bullish candle. And also one more important thing, it was trying to move up and it was seen struggling for around 4 hours, and it failed to hit the 5644. There is a zone just below 5644. There is one more level. Okay, and from that level to the 5644 there is a very strong zone. Last time also, okay, when it was consolidating, we have seen the same case. It was struggling and it has failed again and again to clear that heavy zone. And here in my first and second updates on Friday, I have repeatedly mentioned that chances are technically zero. So this means that although the market is bullish, the sentiments are bullish. Okay, so this is a bullish candle. Okay, and after the formation of these 4 bullish candles, so it clearly indicates bullish sentiments. Okay, but because of this last 4 hours movement, okay, 4-5 hours where it was struggling heavily, okay, and failed to hit 5644, so it is still under pressure. It is bullish, but it is still under pressure. This means that it will try to move up, but there is no guarantee that there will be a gap up open. No, gap up open is not guaranteed. But irrespective of any open, it can try to move up, and even if there comes a fall, then also it will try to sustain because of these the renew or the bullish sentiments that are there. Okay, so this is how it is going to work. Now let's talk about the technicals, but before that, let's also analyze the daily candle of the Dow Jones. Again the same picture, okay, there is no open equal to low condition, and again it was trying to move up, but it also struggled and failed. So similarly the same condition, it is bullish but still feeling some pressure, feeling some heat. Okay, but the good thing in the Dow Jones is that on the weekly chart its MACD is bullish and the stochastic RSI is bearish. So Dow Jones is not feeling that kind of heat or that kind of pressure which the S&P 500 is feeling. Okay, now in terms of the technicals, the moving averages are now trying to come into, okay, a fan out pattern. Okay, so that is necessary to keep it, okay, bullish, and that earlier we have seen here also. And like in next 1 or 2 days, okay, if there comes a bullish candle or if there comes very thin red candle, then in next 1 or 2 days it is expected to come into this kind of fan out pattern, and then it will be bullish. But as of now still it will be considered bullish because S&P 500 has closed above the moving averages. It has cleared this heavy zone. Okay, and remember the same zone is the moving averages. Okay, this the club of moving averages will also act as strong support for the S&P 500. So through moving averages, S&P 500 will be seen or considered as bullish. Okay, and one more thing to consider, that there was a bullish slip. And if you have subscribed to my YouTube channel for last many months or years, then again and again I have shown you the impact of the bullish slip and the impact of the bearish slip. Formation of bullish slip means bullish. Bearish slip means bearish. So on Wednesday, September 11th, it formed a bullish slip. I informed my Patreon community members that now bearish side is over. Okay, and bullish. Okay. Anyways, now so SP500 is bullish through the moving averages. SP500 is bullish through the Bollinger Bands. SP500 is bullish through the Ichimoku cloud. And on Friday, okay, there was a change in the MACD. MACD has also given a bullish crossover, and this is a point of relief, okay, to the bulls. Stochastic RSI is already bullish because MACD and stochastic RSI both are bullish on the daily chart. This will support the bullish movement. It is neither overbought nor saturated. Okay, so overall on the daily chart, okay, we can see that S&P 500 is 80% bullish. Okay, once there comes a clear fan out in the moving averages, then it will become absolute bullish. Okay, now comes the Dow Jones. If you notice the technicals of the Dow Jones, okay, so on the same day, Wednesday, September 11th, there was a bullish slip. So here we can see that again on Wednesday, September 11th, there was a bullish slip in the Dow Jones that helped the Dow Jones to move up. Bullish slip in the Dow Jones and bullish slip in the S&P 500. That was one more technical reason, that after a non-technical reason, there were two technical reasons, okay, that it moved up, the market moved up. Anyways, now S&P, now the Dow Jones. So Dow Jones in again as early as on Monday is expected to give a clear fan out, and for now through the moving averages, Dow Jones is bullish. Through the Bollinger Bands, Dow Jones is bullish. Through the Ichimoku cloud, Dow Jones is bullish. Now comes the MACD. MACD of the Dow Jones is still trading bearish. Okay, and yes, one more important thing, if there comes a fall or a good fall on Monday, then the bullish crossover which is about to happen in the Dow Jones will not happen. Rather, it will form a slip. Okay, the MACD will form a bearish slip. In that case, not just okay, it will be on Monday, then on Tuesday and Tuesday onwards we will see more and heavy fall or the bearish movement. Okay, however, because Tuesday it will be retail sales data and Wednesday it will be FOMC, so even in case of the bearish slip we might not see heavy fall, just a limited fall. Okay, but if the FOMC, okay, if the Fed chairman, if he goes hawkish, in that case there will be fall. Okay, no one can stop that fall. A dovish condition will change the direction of the market, will help it to move up and to make new all-time highs. Stochastic RSI is bullish, okay, and it is neither overbought nor saturated. So the Dow Jones is on the daily chart. On the daily chart, the Dow Jones is not as bullish as the S&P 500 is. So on the daily chart, Dow Jones will be considered only 70% bullish, whereas on the weekly chart it was 85% bullish. So overall Dow Jones is heavily bullish. S&P 500 on the weekly chart was 70% bullish. On the daily chart, S&P 500 was seen again 80% bullish. So again, means the entire US stock market is bullish, as simple as that. But in the next week, as early as on Monday, it will be very clear that what is going to happen. The trend line of the Dow Jones and the trend line of the S&P 500 and the zone of the S&P 500 and the bearish impact of the MACD and the stochastic RSI is going to define a lot of things. Okay, Monday will be very crucial. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. And guys, it is not just about these daily precise updates, but I also give the stock market opportunities in the premium stocks of the US stock market, top 30 companies. So I give minimum 5 to 10 opportunities every week to my Patreon community members. So guys, if you have not yet joined my Patreon community, then in order to get these opportunities as well as the daily updates, the daily analysis, precise analysis of S&P 500 from Monday through Friday, you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And on my Patreon page, you will see that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting daily S&P 500 analysis, updates, probable movement, as well as the opportunities, minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and they know what is going to happen, what is happening and why that is happening, and they know the support and resistance levels, the zone, support zone, resistance zone, etc. and everything. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, that what is going to happen in the S&P 500 in the next week from September 16th, which is Monday, to September 20th, that will be Friday. Okay, so last week it was 5395. This week it is 5644. Okay, so in simple words, just remember 5644. Okay, although there is a zone at 5644. So now before I discuss the numbers, okay, number one, Tuesday retail sales data will be published. And because nowadays everyone is talking about whether the economy will fall into the recession or not, this means that retail sales data becomes valuable. Okay, so last month we have seen a heavy bullish movement when the retail sales data was published and it was favorable to the Wall Street. This means that, see, Monday is blank, there is nothing on Monday, but Tuesday it will be the retail sales data. Okay, this data will be released pre-market at 8:30 a.m. Eastern Time, US and Canada. Okay, now, so this data can make a heavy impact on the stock market. Okay, so as of now, I cannot say that if the data will be good or bad, then how it is going to make an impact, because it has reached to the situation. And secondly, on Wednesday, just the next day, the FOMC is scheduled, and this time the projections will also be released. Okay, so stock market is expected to react heavily, very heavily, because the projections will be released, and the projections will tell the market whether the Feds whether the Federal Reserve is expecting the economy to enter into the recession or not. Okay, so the press conference will begin at 2:30 p.m. Eastern time on Wednesday, but the data and the projections will be released, or the FOMC statement will be released at 2 p.m. So this time the stock market will react heavily, okay, once the statements and the projections are released, okay, because it will be quite clear whether the economy is expected to enter into the recession or not. So anyways, this is for the next week, and these are two important events. After Wednesday, the market will get a direction, okay. If it will be a bullish direction, then towards 5,750 or beyond. If it's a bullish direction, then it will be heading to 5,000 or below 5,000. Okay. Now, in terms of the technicals and the levels, but before that, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And for the daily precise updates of the S&P 500 every day from Monday through Friday, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the numbers, okay, as you can clearly see on my screen, it is all about the trend line. Okay, trend line is roughly at 5644. This is for the S&P 500, and we must also consider the trend line of the Dow Jones, which is around 41,650. Okay, and this 41,650 is beyond the all-time high of the Dow Jones. Okay, so now there are these two heavy resistance levels for the Dow Jones. Number one is its all-time high. Number two is its trend line. Okay, its all-time high was 41,578. 41,585. So from 41,585 to 41,650, there is a very heavy resistance zone for the Dow Jones. So this heavy resistance zone in the Dow Jones, and this heavy resistance zone in the S&P 500. Okay, so in the S&P 500 it is 5644. Okay, and there is one more level below this, the 5644, that is creating a heavy resistance zone. Okay, and then there is a confluence zone, and once the S&P 500 breaches this, the confluence zone, okay, then just after confluence zone there is the all-time high 5670. But yes, one thing is clear, or let me tell you this one very important thing, and this is about the trend line breakout. That generally for the trend line breakout to happen, there comes a gap up open, and this open is seen above the trend line. Because once there comes an open above the trend line, then it puts that index or the stock in a breakout condition or in a breakout situation. But if there comes an open below the trend line and it tries to move up and it breaches the trend line, then that is not considered as breakout. Breakout will be considered in this case if there comes an open below the trend line, it moves up, it hits and breaches the trend line, and at the time of closing it closes above the trend line. Number one. Number two, once it closes above the trend line, then immediately the next day it must give another closing above the trend line in a manner that the open must be above the trend line itself. Means there must come an open above the trend line and also the closing above the trend line. When these two candles are seen in this manner, then it will be seen or considered as a trend line breakout. However, if there comes just one open, okay, just one open above the trend line, just above the trend line or at any level above the trend line, and in this case I'm talking about the S&P 500, okay, but you can relate it to any stock or any index. Okay, so this is just for your technical knowledge. If there comes an open just above the trend line, then it can hit or it can test the trend line. If it sustains and doesn't give up the trend line, rather retraces, this means that it is going to give a breakout. Okay, so I hope this is clear. And in future, okay, whenever you see such kind of conditions, such kind of situation, it will help you to trade carefully. So this condition of trendline breakout will be applicable to the S&P 500 in the same manner and in the Dow Jones in the same manner. However, the second part to this, if there comes an open above the trend line, okay, but in 90 or 95% of the cases it sustains. But if there comes an open above the trend line and it loses the trend line intraday, and the closing is not seen above the trend line, rather closing is seen below the trend line, in that case it is not a bullish breakout, but it indicates a failure in a manner that we can anticipate more fall. Or if it gives an open below the trend line, it moves up, tries to breach the trend line, it breaches but closes below trend line, and for 2-3 days it happens in this manner. It hits, breaches the trend line, but gives closing below the trend line. In that case, it will come into a condition wherein it will be forced, it will be compelled to fall. And the same rule, the same everything, it will be applicable to this, the Dow Jones. So now that the trend line is clear, 5644 is the mark. Okay, so those who do not care about this trend line or who cannot draw the trend line, just remember 5644. If there comes an open above 5644 and also a closing above 5644, it will be seen or considered as a trend line breakout. If there comes an open below 5644 but it moves up, breaches and closes above 544, the next day there must come an open and closing above 5644. Now let's talk about more numbers and technicals. But before that, guys, there is one very important, very critical information, so please do not skip this part. I am experiencing some issues in my YouTube channel, which is why if something happens and if you are unable to watch my YouTube videos, my weekly technical analysis, then I request you to join my Patreon page, Patreon community for free. You need not to pay anything, because I also upload the same weekly technical analysis of the S&P 500 on my Patreon channel for free. This is why, to stay connected, I request you to join my Patreon channel, my Patreon page for free. And this will ensure that you will never miss my weekly S&P 500 technical analysis. Now the impact of this, the bullish and the bearish movement. Well, I will not say the impact. Okay, I will say that a movement beyond 5644. See, if you notice from 5644 to 5670, okay, so it is only 0.5% or 0.4% for the S&P 500. Okay, so that is why it seems achievable. However, we must not forget that the similar kind of situation, the similar kind of condition was there, okay, back in last week of August. Then what happened? Because it failed to move up and it was resisting and there was the confluence zone, it failed. Okay, so although it may look like 0.4, 0.5%, but this is, the S&P 500 is now going to enter into the very heavy resistance zone. This means through a bullish breakout, 5670 is fairly possible, not just possible, it will be like 100% certain. Okay, through a proper bullish breakout, it will be almost 100% certain it will breach. And as soon as it breaches 5670, new wave of bullish sentiments will be seen, or the bullishness will be seen, and that will then force it to move up higher and higher before it actually comes down. Now, why I am saying that it will actually come down? I have shown you the swing in the MACD of the Dow Jones. MACD is the prime index of the S&P 500, remember. Okay, someone is swinging the market. Historically, whenever there were swings, okay, there was always a fall. If the swings were on the weekly chart, a fall for weeks, months or so. Okay, for swings on the daily chart, fall for 1 or 2 weeks. And remember, this is just like a pattern. This was a butterfly pattern, confluence zone. Very likely it was supposed to fall. Very heavy chances that there was supposed to come fall. Similarly, there is a pattern. Okay, this is the swing. Okay, in the similar manner. Now, so yes, there is one more thing, that S&P 500 and Dow Jones or the Wall Street may remain silent on Monday. Means on Monday you might see very little movement, just up, down, up, down, up, down. A breach can happen, 5644. I'm not denying the fact. The breach was not supposed to happen on Friday, but on Monday a breach can happen. Okay, remember this point. A breach can happen, but just a little movement, but the closing will then define the future, or the closing will then decide the near future. Now, Tuesday market is expected to give heavy movement. Whether it will be bullish or bearish, it will depend. But generally, because now the FOMC is in the picture, if the retail sales data goes against the stock market, against the Wall Street, then what should happen? It should come down, right? Not actually. Because next day the FOMC is in the picture, and recently we have seen that there was a heavy bullish movement. September 11th bullish, heavy intraday bullish movement, approximately 2.75% was there for no reason, absolutely no reason. Okay, so because someone is trying to push the market in this manner, then it is highly likely that if the retail sales data goes against the market, then they will wait for the FOMC. There might come a little fall, that will be okay, but a heavy fall is not expected in that manner. However, there is just one heavy support level. Okay, so we will not speculate. If it loses that heavy support level, in that case it will go bearish, it will fall. Simple. Okay, now but here you can simply see that there are these moving averages. Okay, moving averages are going to provide that heavy support, along with that the heavy support level. But still, okay, I will trust my support level, because moving averages will change the value, but my support level and resistance levels will remain same, and they will work as they have worked earlier. Historically they have proved themselves. Okay, yes, I was discussing this. Yes, if the retail sales data comes favorable, is seen favorable for the Wall Street, then no doubt, okay, it will try to go bullish, and in that case we can see a bullish breakout. If there comes nothing, if nothing happens on Monday, and favorable retail sales data on Tuesday, then it might not wait for the FOMC, a bullish moment. Okay, now the FOMC and the projections. So as I mentioned that at 2 p.m. Eastern Time, US and Canada, okay, on Wednesday, the FOMC statement and the projections will be released. And because the projections are going to tell us whether the economy will enter into the recession or not, this means that at 2 p.m., sharp 2 p.m. or just like 2:01 or 2:02 around, so okay, like 1 or 2 minutes or 5 minutes, we might see a heavy movement either in the bullish side or in the bearish side. If there comes through the projections, if there comes or if there is means a condition, if a condition is seen, a condition in a manner that it says that there will not be a recession, rather there will be a correction. Correction means a sharp landing. Correction means 20 to 25% fall. Okay, so there will be a correction but not a recession. In that case, okay, it will be seen favorable to the stock market. In that case, it will try to sustain, and also at the same time it will then wait for the press conference, which will be there at 2:30 p.m. okay, on Wednesday in the second half, and then based on the comments of the Federal Reserve Chairman, okay, the market will give the swings, right? Once Wednesday is over, then there is nothing, and then Wednesday will be trend setter. Trend setter means if it goes bullish, remains bullish on Wednesday, then bullish. If it goes bearish, remains bearish on Wednesday, then bearish. Okay, but if you do not want to take this much of pain, okay, in that case just follow the numbers, that's it. But I gave this all of this information and the live updates to my Patreon community members, all of the comments, okay, and I tell them whether you should go bullish or bearish, okay, on that particular day when there comes very heavy volatility in the market. Bearish side will be triggered once it loses the these are moving averages, and just below the moving average, just around the moving averages, there is a very heavy support level. Once that level is gone, then it will enter into the bullish side in a manner that this time it will come down and hit 5395. So 5644, 5395, Yes, there is one more heavy support level in between. Okay. Now, what happens at 5395 will then define the near future of the S&P 500. Just like, okay, on September 11th, if it manages to sustain at 5395, okay, in that case, again, a bullish swing will move up. Okay. If it loses 5395, then this time it will be going towards 5000. Before that, it will be 5192. Okay, once again, 5192 is my calculated support level that I have disclosed, okay, earlier also. And similarly, 5644 is also my support level that I've disclosed, okay, earlier when it was trading around this, okay, because it was very, very critical at that time. So in this manner, so the fall from 5644 or from here, the fall will be the fall will be to 5395, and remember, I'm talking about Wednesday. That will be around 4% fall, 4.25% fall, and then 5395 will decide, okay, whether it will be able to move up or not. I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members. And guys, there is one more thing, that on my Patreon page, my Patreon profile, other than these, the daily updates and the free weekly technical analysis of S&P 500, if you notice that there are these three buttons: home, shop, and about. When you click on the shop button, then I have mentioned a product here. Okay, this product is the options trading plus real-time calculations through the options premium calculator and the option strategies. So if you want to learn the options trading, the real-time calculations, and the option strategies, and everything about the options in detail, then you can buy this product. And I've given the link to my Patreon community in the description of the video and also in the comment section. You can follow the link, and then you will find everything here on my Patreon page in my Patreon profile. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of September 16th, means from September 16th, which is Monday, to September 20th, that will be Friday.